We're always searching for potential winners, especially in moments like this, where you might get a terrific buying opportunity the next time we hear about discouraging news about the debt ceiling negotiations, something that's almost a given since they love pointless drama down there in Washington, don't they? I'd still call that a high-quality problem, given that there were no negotiations to speak of just a couple of days ago. Right now, we're in a tricky moment, because if you want to know where the market's headed, you need to be able to game Washington in a high-pressure situation that's inherently unpredictable, right? At the same time, you've also got to game the Federal Reserve. Will they really pause the rate hikes at next month's meeting, or will they insist on lowering the boom on us again? As we heard from several Fed heads in the last 24 hours. So, at times like these, you know what I like to do? I take a step back, because it's hard for anybody to make an objective assessment of political issues. We all have our biases with this stuff. So it's tougher to analyze and say something nonpartisan like Procter & Gamble's gross margins. By the way, we own Procter for the Travel Trust, and it got bruised again today. And you know what I think? Buy, buy, buy! Sometimes you need to take your own subjective feelings out of the equation by consulting the technicians and the technicals. And that's why tonight we're going off the charts with the help of Larry Williams. He's the legendary technician and market historian who's been the top expert in the space since before I could drive. Larry's written over a dozen books and created a host of his own proprietary technical indicators, which you can find on his website, ireallytrade.com. You ought to go. It's fantastic. Plus, he's only getting better with age, as his recent track record's incredible. This is the guy who called the COVID bottom in the spring of 2020 when Wall Street was ready to jump out of the windows, okay? He called the big January rally at the beginning of this year. He realized the NASDAQ was ready and nailed the Netflix move, which, by the way, rallied 31 points today. So, what does Williams, who's so red hot, see right now? Well, you know what? He is actually feeling quite bullish about the broader market. But before that, let's talk about one stock that he likes in particular, and that David Faber will certainly want to listen to. Yes, take a look at the weekly chart of none other than Tesla. At Tuesday's annual meeting, Elon Musk warned that the next 12 months would be challenging for Tesla, thanks to worldwide economic weakness. Williams doesn't dispute that the next year might be difficult for the company, but he feels a lot more constructive about Tesla's stock. Remember, they are two different things at times. I don't think Larry would argue with Musk about electric vehicles or rocket science. Stocks are another issue, though. And right now, he thinks Tesla's got an awful lot going for it. Now, let's go to these charts. Williams is always looking at the past action in any given stock to identify cycles that seem to repeat themselves over and over again, which they do. And Tesla sees both a long-term cycle and an intermediate-term cycle. You can see the longer-term cycle. That's the one in blue. This is a 42-month cycle. Tesla's major highs and lows have all pretty much stuck to this pattern ever since the stock began trading. Why does it matter? Okay, because right now the long-term cycle's looking pretty darn good. It bottomed near the end of last year, which is when the stock stopped going lower, right? And if history's any guide, this pattern says Tesla can keep rallying through the second quarter of next year. Rather than worrying about the next 12 months, Williams recommends buying the dips, although you might want to lighten up on your position into any of the big rallies. But look at this. You see where this is headed. Williams was so right on Netflix. This is the same kind of feel that I got about that call they made on Netflix. Now, speaking of big rallies, he says Tesla's due for one right now, right here, because there's another cycle that matters, the intermediate-term cycle, and that's in red. According to Williams, when Tesla gets to this phase in the cycle, historically it's rallied 80% of the time from right about now through early September. 80%, I will take that. I can't tell you why these cycles seem to repeat themselves. I can't explain why they often lead to successful trades. I can only point you to Larry's amazing data, because you can't argue with that kind of track record, and you can't argue with his data. Now, check out this weekly chart of Tesla with Williams' proprietary indicator at the bottom that measures hedge fund and mutual fund buying. This is the other reason he's feeling positive on Tesla. These money managers have an excellent track record of buying the stock right before rallies. In other words, they're not contrary. They're actually correct. Over the last 4 weeks, they have been buying Tesla stock aggressively. That suggests the stock's getting ready for a big move higher. How about the daily chart with the same institutional money manager indicator at the bottom? You can see that even when Tesla's price has declined, the blue line, which shows professional accumulation, didn't go down. Nice. Money managers stuck with this one on weakness, and they tend to buy it right before strength. Plus, it doesn't hurt that Williams says the seasonal pattern is on Tesla's side right now, too. Okay, We've now exhausted all the great news about Tesla you could have this week, haven't we? Well, I think this is the best of all if you're a stock guy. But let's see about the broader stock market. Right now, Williams is feeling darn good about the stocks for one simple reason. For over a year, inflation's been our number one worry. And right now, inflation, despite what you hear, despite what you see, is actually vanishing almost as quickly as it came. Here's a really important indicator nobody talks about. This is the New York Fed's underlying inflation gauge, which is very much headed in the right direction, wouldn't you say? This tells Williams that the Fed will soon back off on its rate hikes. Maybe it takes one more meeting, but it likely won't be more than that. Now, I know this is contrary to a lot of the tough chatter you heard in the last 24 hours from various Fed leaders. But you know what? I'm not going with them. I'm going with Williams. Next, take a gander at the weekly chart of the Dow Jones Industrial Average with Larry's long-term stock market cycle shown here in red. Right now, the long-term cycle is pretty darn bullish. We see that. Williams says this cycle has been a reliable predictor of stock prices for over a century, and he doesn't think it's going to fail us this time. At the same time, the intermediate-term cycle in blue suggests we could have a nice run at least through mid-July. How about that? Another one you'll take, right? Although it also predicts a pullback from mid-July through September. But you know what? In the interim, you'll be in clover. Finally, check out the daily chart of the S&P 500 futures in black with a proprietary metric from Williams in blue. We often use the advanced decline line to measure the strength of a given move. This indicator does something similar. Williams likes to measure accumulation in futures contracts by combining volume, open interest, and price accumulation into this one line called the Williams POIV, which gives you a better read on the strength of the market. Whenever the POIV is trending lower, then it breaks out above its trend line. After that period, that tends to set up for a very nice rally. Right there. That's what he's talking about. This moment, okay? That's exactly what happened in the POIV not that long ago. Still one more reason to expect a rally here. Bottom line, despite all the hand-wringing about this moment, the charts, as interpreted by the legendary Larry Williams, suggest that the broader market's headed higher, and in particular, by the way, Tesla stock could have a really, really nice run. Zach in Minnesota. Zach.
Explain yourself, Cramer. You got me all fired up over American Express. I thought it was supposed to be best in class in car companies. So why is it underperforming its peers so badly since the regional bank fiasco? I keep hearing the typical AXP cardholder is insulated from high inflation and recession. I even heard white-collar workers that are being laid off by the thousands are receiving severance packages. This should translate into continued spending in a lower rate of delinquencies. But if I know all this, then Wall Street certainly does. So is this the fair value of the stock, or will it go back over 170? Thank you.
Zach, maybe the chart is wrong. Maybe the stock is not following the fundamentals, because the fundamentals are darn good. Steve Squeery's going to deliver. If people like Capital One, they should love American Express. AXP, memo to Lisa, enough. The points go to me this month. Raymond in New York. Raymond.
Hey, Jim, how you doing? Hope all is well.
What's going on with you, Raymond?
Just giving you a call to talk about the recent price decline of the Nike stock. It was around $128 a share, right?
Yeah.
And in the last few weeks, it's dropped to $117. Today, it's up about 1.62% at $118.87, but going nowhere fast, even though their last quarter results were good. So I understand that Nike's whale activity is within a strike price range of about $80 to $135 in the last 30 days.
All right.
So what do they know that we don't know? Is
okay, everybody's worried about the China middle class stopping its buying. There is some truth to that. China has not had strong middle class buying ever since the end of the pandemic. I think it's because they're going to catch up, but the Alibaba numbers today weren't that good. My suggestion is Nike went up $1.89 today. Do not buy it until it gives back down to $115, $113. I can't be that bullish after the Baba numbers I saw and some of the middle class numbers that I've been reading out of China. The charts, as interpreted by Larry Williams, suggest the broader market is indeed ready to roll, and Tesla could be one of the leaders in the upside. Much more money ahead. You called it and you stumped me on Viking Therapeutics. So could this be a stock that could ride the wave that Larry Williams just pointed out? It's exciting. I'm turning my homework on the biotech name. Then I'm always telling you about the channel. So why is it more important than ever to pay attention to this corner of retail that is very dreaded, kind of like a riptide? I'm revealing a few names that I think could capitalize on this unique moment. And, of course, all your calls rapid fire tonight's edition of the Lightning Round. So stay with Cramer.